Welcome to Trading-Pennies.com Chart of the Week, where every week we will examine this trading strategy behind one of our explosive daily stocks picks. All of our strategies are covered in detail in our manual, Learn How Professionals Trade the Penny Stock Market, available at our site at Trading-Pennies.com. This week's chart is BioClean International, manufacturer and marketer of customized aqueous parts washing and weapons cleaning systems, ticker symbol BCLE, within the basic materials sector. What caught our attention in this stock was the initial orderly pullback from a previous breakout into the ascending support of the rising 20-period moving average as seen on the daily chart. As noted in our manual, pullbacks are consolidations from a prior breakout, particularly the initial breakout, into either the support of the underlying ascending 8-period or 20-period moving average are some of the most profitable patterns to trade, and seeing this forming in BioClean International, it placed it on our watch list of potential breakout stocks. In review, a consolidation forms when a stock's price movement trades within a range between two established boundaries. These can be trend lines or price points after a directional movement in a stock's price. Consolidations visually take on the appearance of either a pennant or a triangle. The slope of the triangle or pennant can visually appear either level, downward, or upward in orientation. As a general rule, downward sloping flags, or pennants, and upward sloping triangles are considered bullish, and upward sloping pennants and downward sloping triangles tend to be bearish. Flat or level triangles or pennants are generally considered either bullish or bearish depending on the trend that immediately precedes their formation, and therefore are considered continuation patterns. In the case of BioClean International, these boundaries were formed by two downtrending trend lines, forming a descending price channel or consolidation pattern known as a bull flag, which, as previously noted, is considered bullish in nature. Seeing these patterns is one thing. Anticipating the success or failure of each other is another. To that end, we begin to look at a little bit more in depth into the internals of their formation. BioClean International had bounced off a long-term price support of 0.006 in late January, and then broke out of two succeeding overhead price resistance levels soon after to a high at a natural price resistance level of 0.10. A few may wonder what is meant by a natural price resistance level. These are usually whole numbers and have a psychological impact on numerous traders, and as such are anticipated natural price resistance levels. In penny stocks, as the price of a stock moves from a single-digit price to a double-digit price, for example from 9 cents to 10 cents, these levels have a greater psychological meaning, and where a greater degree of resistance can be encountered or anticipated. It is well known that the first pullback from a prior breakout has the greatest potential for continuation, and thus offers one of the most consistently profitable trades, so we always look for these pattern formation. To increase the likelihood of a pullback's pattern success to our risk-reward potential, we look for other certain characteristics. 1. As is demonstrated on the daily chart of BioClean International, we like to see a corresponding consolidation of both volatility in the average daily range and volume as the pullback progresses. It implies that the buyers are holding on to their shares and are waiting for the price to move down to a level where they can add to their position, and in general the consensus is there will be a further advance. Other favorable signs is that an initial breakout did so on relatively little volume, as the stock was apparently under other traders' radar. Another favorable sign is that the depth of the pullback does not exceed 50% of the range of the prior move's price expansion from the low to the high. As can be seen on the chart, BioClean International moved off the low of 0.006 in late February to a high of 0.10 cents in February 12th of 2009. Thus, the 50% retracement level represented a level at the 0.047 to 0.05 price range. Looking at the chart, you can see that this price level represents a prior significant resistance level that BCLE broke out of on a previous day on significant volume. As noted in our manual, when a resistance level is broken, particularly on significant volume, that level often becomes a point of support if and when the stock approaches it from above in the future. The strength of this support is relative to the strength it served as a prior resistance, and as noted on the chart, the 5-cent price level represented a rather significant prior resistance level. The last thing we took note of first glance was that all of these events were converging as the stock consolidated into the underlying support of the ascending 20-period moving average on the daily chart, which was one of the most utilized and significant moving averages amongst traders. As always, before taking any position, we always perform multiple time frame analysis looking for potential resistance levels, as this is always a concern of a trader when determining the risk-reward potential for any trade entry. On the monthly chart, we saw potential resistance levels at the 0.125 and 0.25 price levels, as well as a lot of open air between these price targets and the prior resistance level of the breakout at 5 cents. On the weekly chart, we saw potential resistance levels at the 0.06 and 0.125 price levels, and the upper boundary of an upward sloping price channel at the 0.15 cent price target, drawn from the established lower boundary trend line across the lows of the recent move and projected forward from the high of the prior breakout of 0.10 price level. On the daily chart, we saw possible resistance levels at the 0.07 and the 0.10 price levels, and the upper boundary of an uptrending price channel which converged at the 0.15 price levels. These channels were drawn prior to the price volume movement between February 23rd and February 27th. We also noted the formation of a cup and handle that appeared to be and subsequently formed during the last week. As noted in our manual, cup and handle patterns are some of the most profitable and predictable patterns to trade. Since these patterns were forming on the daily chart, we used them to project potential or future price targets, which too will serve as resistance levels. To do this, we used information previously obtained looking at the price expansion range from the prior breakout lows to its high, in this case the 0.006 and the 0.10 respectively. These represented a 0.094 cent price move. We then added this 0.094 cent price move to the lows of the current pullback, the 0.05 cent level, to project a potential move to the 0.144 price level, which correspond with other price targets previously noted. Thus, the 0.10, 0.125, and the 0.15 level represented significant resistance points to us and targets where we would look carefully at the price volume action of the stock should we take position. When considering taking position, we always utilize the intraday 3-minute period chart using a 200 period moving average. On February 24th, we noticed that BioClean International broke out of the price resistance level of 0.07 on a burst of a volume and where we took initial position. Once in a position, our attention quickly turns to exit strategies. As noted in our manual, a profit is only realized should you sell your position at a higher level than that which you entered. To this end, we look at the price volume action around key resistance level, in this case the 0.10, 0.125, and 0.15 cents levels. As noted throughout our video series, our most trusted stop loss point is the underlying intraday ascending 200 period moving average on the intraday chart. On an intraday basis, we like to use this as our moving stop loss, providing the following rules. If it is broken with 2 consecutive candles, we use this as an indication that the trend is changing and a good place to take profits exiting our position. If it is broken on significant volume during a single candle, we view this as a warning sign and will quickly look to any other confirmation signal for exit. As can be seen, the price volume action of BioClean International held strongly above the rising intraday 200 period moving average, and as such, we held the majority of our position as it retested the previous breakout high of 0.10 price level going into the close. As a side note, had the price volume action at the time demonstrated any signs of a volume climax, in other words a vertical price expansion above the 200 period moving average on abnormally high volume, we would have exited the majority if not the entire position at this time. As can be seen, on the open of February 26th, this is exactly what happened, and as such we exited our entire position from 0.125 to the 0.15 price range as BioClean International vaulted out of the gate at the open, demonstrating the classic intraday volume climax pattern. Our suspicions proved correct as the stock fell back in afternoon trading, violating our stop loss rules by breaking the support of the underlying intraday 200 period moving average with both 2 successive candles and one with large volume. Had we were holding any shares at the time, we would have exited the rest of our position here, especially going into the close. Members have asked our opinions as whether the move in this stock is over. This we cannot say, and the daily chart remains intact technically. Our opinion at this time is that we believe that it is likely to consolidate once again, and we will keep it on our watch list as a stock of interest, looking to how the price volume action behaves and what we anticipate will be a retest of the 0.10 price level in the near future. Until next week, from Trading-Pennies.com, this is Thomas McClellan, where our goal is to help you learn to become successful trading the penny stock market.